Hi, I'm Soleil. I'm a venture capital investor and angel investor based here in Sydney. Today, I'm going to be taking you through a high level about what investors are looking for when they are assessing early stage venture capital deals and what you as a founder should be looking for in an investor. This was originally part of a presentation that I gave at the Western Sydney Startup Hub Innovation Festival that happened a couple of months ago. So what I'm going to go through, it's not exclusive. I'll cover the main areas of and points that investors are initially looking at. But remember, when you do get a meeting with an investor, it's all about opening that door, opening that conversation, whether that leads to another meeting or adding the investor to your regular company updates, or perhaps opening up your data room so that you can dive into due diligence with the investor. So, here are 8 broad areas we'll be covering today. Again, this is not an exhaustive list, but having a clear story and some comprehensive answers for each of these areas can help to paint a picture for the investor. It'll also answer a lot of the initial questions an investor is likely to have. All of this is assuming that you are within the investor's investment thesis that they are looking for in terms of deals. So, this presentation is going to be focused when you're starting to think about approaching investors. And remember, if you do decide to go down this venture capital path, then you will likely be raising funds every 12 to 24 months. And the questions and the categories are likely to evolve as you scale and grow your company. So let's take a deeper dive into each of these categories I've got listed here. So, the all important team. Whether you're a solo founder or you have co-founders, this is an area that investors do place a lot of importance on. At the early stages, you may not have much traction, and so it's really the team that the investor is investing in. So the points here of what is your subject matter expertise, your industry knowledge, your personal association with the problem that you are solving. Does the investor have confidence that you know what you're doing or that you have the right skills to work out what you do need to do or take, or the next steps that you need to take? So I've got here resilience as well, because as you know, starting a business is really hard. We want to be assured that when things get tough, that you're going to keep going, or that you will pivot appropriately when the market or the data or the information tells you otherwise. Which leads neatly to my next point about being an iterative executor. Are you able to acknowledge feedback and then take that into adjusting and improving your solution when and where required? Some investors, and I would count myself as one of them, may like to get to know founders over a period of time so that they can see how they execute. For some, this may be over a couple of months. For others, it could be over a year or so. But a great way to show this is by meeting investors earlier than when you perhaps intend to start raising capital. And also, a great way is to be sharing regular company updates, which I plan to share another video on at a later date. So, the next category we're going to have a look at is product. So, there are a few things here to consider. So, the first is whether your product is actually solving a pain point that is being experienced by customers. And then whether this product can meet the market demand of it, which is often referred to as product market fit. So that is that customers want to use your product and they're willing to pay for it. Again, we understand at the early stages you may not be monetizing your product yet, but there are still ways to demonstrate the utilization of the product, and also a customer's propensity to want to pay for it as well. And also, it's good to understand, how does your product stack up against the competitor, against any competitors. We'll be going through this in one of the categories in a bit more detail, but it was still important to put competition in the context of the first two dot points that I've got here. You may have heard of the acronym TAM. So TAM stands for Total Addressable Market, and it represents the total revenue opportunity available for your product or service if you were to obtain 100% market share. So ideally, this number should be in the billions, because if you remember in another video where I show about the venture capital life cycle, investors are looking for a really big return on their exit of their investment. And so demonstrating how big the market can be for what you're building is really important to paint this picture for investors. It's also it's also wise to remember to, when you're creating these and calculating these TAM numbers, to be able to justify them and calculate them so that they are believable. So you could calculate this TAM figure for your particular geography, but I'd say it's generally a good idea to also calculate this globally, because VC investors generally have the expectation that you will become a global company. So having a broad understanding of the different geographies you'd be interested in for your growth story would be good to put a little bit of thought around. The timing of the market can be really important as well. And I just want to give one example of that timing. So, back in the day, Facebook was used on a desktop, but the iPhone was launched in 2007, and the mobile app version of Facebook came out in 2008. So, that's just a small example of what timing the market could look like. Next, we're moving to the also very important category of metrics and numbers. So, examples here include customers and revenue. Again, if you are early, we understand that you may not have a lot of traction, so you need to show this in other ways. So, examples of this could include waitlists and also trial users of your product. It's also important to show the growth metrics month on month and over time, because you want to show that demand and uptake, of course, which can also help show product market fit, which we touched on a couple of categories ago. The business model and the unit economics shows how you're thinking about making money. Also, forecasting financials is really important as well. And this isn't about getting it right, it's more about providing an indication of how you're thinking about the business, and also how you're thinking about it in the future as well. The key thing that investors are looking for in your financial model are, what are the levers you are going to pull to grow and to scale. So that's why it's critical that as a founder, you understand your go-to-market strategy and that your operational and financial plans match this ambition. Intellectual property. What is the special sauce about your product? So this could look like patents or proprietary technology, but I do know some companies who decide early on to keep keep certain aspects more of a trade secret, and maybe when they're later down the journey, then decide to patent the technology. The key thing here is to demonstrate what is your domain expertise. So, similar to what was discussed in the team category. There could be other ways to demonstrate this by research methods or data that you have on proven efficacy or outcomes from the utilization of your product as well. So, the go to market strategy, how are you going to do this and how are you going to grow and scale? So, some questions that may come up are, what are the distribution channels for your product? Can you acquire customers at scale? Because remember, if you are seeking venture capital funding, the expectation is for you to acquire stellar growth. Do you have the appropriate resources and market conditions to execute this growth strategy as well? These are all fundamental questions to ask and have appropriate answers on. We're now going to come back to what we briefly touched on when we were talking in the product section about competitors. So, on that line, what is currently out there in the market? Who are the incumbents? Who are the other digital competitors? Or what is currently being done without your solution? Perhaps it's currently very manual or it's a stitched up process that is quite disjointed. So, this is good to show on a graph as well. So this other category is a catch-all for a few areas, which I think are actually quite useful. So the first thing is, what are the risks related to your product and in terms of growing and scaling it as well? And how are you thinking of countering these risks? What are the deal terms you're thinking about? Perhaps you already have a lead term sheet from an investor. Also, how will you use the funding? This relates to your go to market strategy and how it will fund your growth and scale. And also, how long is the funding going to last for? And this should also tie in with your forecast financials too. It could also be useful to understand whether you have received any prior funding. This also includes grant funding. This is really useful for an investor to be able to benchmark with where you're at so far as well. So, here are the 8 broad categories. Again, I'll emphasize this is not an exhaustive list, but these are the kind of areas and questions you will likely to receive. So, if you do have some comprehensive answers on these areas, you'll be in a much more confident position to paint this picture to investors. All of these aspects help in having those conversations. And different investors may emphasize different areas, but at a high level, you're likely to be asked questions on each of these areas. And they'll also likely be the basis of many of the documents that you will include in your data room. So, this is when an investor decides to do due diligence, and they will look through a folder of documents to help determine whether they will invest. So, on the topic of data room, if you are interested in learning more about that, then drop a comment and then I'll perhaps look at making a video on this as well. But now we're going to turn our attention to what you as a founder should be looking for in a VC investor. Overall, especially early on, it should be more than money, although money is definitely helpful from an investor. So here are 3 broad categories that I think you should be looking for when you're chatting to investors. And when you're going through a process, it is a two-way street. Whilst an investor may be asking questions of you and wondering whether they will do due diligence and then ultimately whether they will invest, as a founding team, you should also be asking the questions. of investors, and whether this is the person or the firm that you want to partner with. The relationship that founders and an investor has will outlive many marriages. So it's really important that this decision is not made lightly. So we'll cover expertise, connections, and trust over the next couple of slides. So the first one, expertise. Can the investor provide you with valuable insights? Or do they have industry knowledge that would be appropriate? Or perhaps that they have some operational background that would be really helpful. Perhaps they've worked at a startup or in this particular industry. These are just all really good things to understand about the expertise of the investor. The next is connections. Can they help you with connections as you grow? What is the access that they have in their network? Can they make introductions? This could be to customers, suppliers, potential employees, and even to other investors. Perhaps they have helpful connections or strategic partnerships they could even unlock for you. And of course, you ultimately need to feel like you can trust your investor. As I mentioned before, these relationships are going to be between you and a person and potentially a firm for a really long time. So you need to have that mutual transparency about what is going on. And it's a good idea to see what their reputation is like in the market too. So, here are just a few points to keep in mind when you're dealing with lots of investors and deciding who you want to partner with. So, that's a synopsis of what investors are looking for, and in turn, what you should be looking for when you're dealing with investors as a founder. Let me know in the comments if there are more terms or aspects that you would like a deeper dive on.